other funds as well because of the merger. And that is a bit of a relief that Equitas is seeing. But generally, banks are ruling the roost, and you can see that in the Nifty Bank. Despite red on other counters, Nifty Bank is holding on to green.
Absolutely. IndusInd Bank, look at that, 2.5% higher now. In fact, Harsha Upadhyaya, the Chief Investment Officer, Equity at Kotak Mutual Fund, is joining us. Harsha, good morning. Happy New Year to you. I'm sure you'd like to weigh in on this conversation we're having about the banking sector and the kind of profitability, loan growth, asset quality improvement we've seen. Do you think a lot of it is priced into the stocks? I mean, names like Axis Bank are at lifetime highs. Or do you think it's a structural up move and there's lots more to go on the upside?
Good morning, Sonia. Happy New Year to all of you. Yes, banking has been one of the sectors where we have maintained a very large exposure for quite a few quarters now. And our thesis is coming right in terms of no asset quality issues. In fact, asset quality issues have, the concerns have completely subsided. We have seen very strong credit growth. This has continued for almost 3 quarters, very strong month-on-month growth and year-on-year growth. So overall, I think this space is looking good, and structurally, we believe that the credit growth improvement that we have seen should continue for quite some time from here on as well. The only thing that one needs to be worried about is whether the margins will hold up or not, because now the credit growth is exceeding deposit growth. So to that extent, there will be pressure on net interest margins. That's what we need to see. But overall, I think the sector continues to be one of the beneficiaries of revival in the domestic growth.
Oh yes, margins, even the interbank liquidity is going down. Reserve Bank is squeezing it out. So even in the interbank market, people are borrowing money rather than lending to RBI. Clearly, cost of money will move up. Harsha, I want to come back to the banking sector in a bit. We over-discuss it usually. So let me go to the other one. Will you be a contrarian buyer in IT now? There is an anticipation that probably by end of 23, the Fed may start cutting, and that would usually be positive techs. But for a whole host of reasons, contrarian buys in IT?
Not yet, Sonia. Not yet, Lata, sorry. We don't think the pain is over yet. But at the same time, we are unlikely to sell further from these levels. We already have an underweight position in many of our schemes and maybe close to neutral in a few of our funds. We will continue to hold on to those positions and look for anything positive on the IT budget. But as we see right now, the IT budget for 2023 is going to be more muted as compared to what it was for 2022. So to that extent, we would still remain a bit cautious on the IT sector, but it may not be such a big underperformer as it was in the year 2022.
All right. Hi, Harsha. Morning. It may not be such a big underperformer. That's pretty good news from an index perspective, at least, because that one was dragging in the past year. Commodities, they have made a big comeback. The debate is on whether you put money in China or India. But from the India perspective, if China is going to reopen, then commodities could do well. Or have they already played that out? What's your sense on that space?
Nigel, we have been very selective on the commodity space because this is a very difficult sector to get all your thesis right. Yes, some of these companies have cleaned up their balance sheets. They have deleveraged quite a bit. And we have also seen the impact, positive impact of rupee depreciation in terms of profitability of this sector. But at the same time, we still do not have enough convincing answer in terms of where the global growth is headed and how strong it's going to be. And that's the reason why we do not want to take an overweight position on the metals or the commodities as yet. But yes, we do have some selective positions based on how balance sheets have improved and how they've been able to manage the whole cycle until now.
Okay. Since we're talking about China, the reopening, etc., do you reckon that the reopening in China could perhaps dull demand for India as an investment standpoint? Do you see more money perhaps globally move into China and out of India?
Jury is still out on that, Sonia. But our guess is from a medium term, from a structural point of view, India is going to benefit from what has happened in the world geopolitically and also the issues that most of the economies are facing. And while there could be some renewed interest in terms of money moving into China in case of a opening of the economy, but clearly I think China, or even if you look at Taiwan, for example, they are more dependent on global growth than India is. So to that extent, I think their overall growth and their market performance would be a lot more challenged even in the year 2023 as compared to India's performance because of their dependence on the global growth. So from that perspective, and also the fact that many of the global majors are actually looking to diversify out of China and rely on various other regions, including India, I think India will structurally benefit over a period of time. But what happens immediately is anybody's guess.
Okay. Now that you've discussed the other sectors, let me come back to banking. Will you come down the line? We have seen a lot of brokerage reports recommending originally only State Bank, and then you started including Bank of Baroda and then Punjab National Bank. I think I saw a report even on BOI. So, the line seems to be, are you with that? Would you go down the line in PSU banks? And your take on old private sector banks? They're actually the best performers. If you look at Karnataka Bank or South Indian Bank, it's like 3-digit increase, 100%, 140% over the year. So both those questions.
Lata, clearly the pressure is on the low cost of funds as of now, as we discussed earlier as well. So from that perspective, we believe the larger banks, whether private sector or the public sector, will be the banks which will be able to hold on to their deposit growth or will be able to sustain the trends that we have seen in the past. So to that extent, we think that the NIM pressure would be more on NBFCs and the smaller banks, whether private or public sector. So from that perspective, most of our portfolio picks have been in the larger banking space. Yes, we do have a couple of names in the smaller banks, both in the private sector and the PSU banks. But those have been very, very selective and depending on the mandates that some of our funds are mandated.
So you don't mind missing the bus on the public sector banks and the private sector banks? I mean, it's mind-boggling the kind of gains that they have seen. UCO Bank is up 150%. I mean, we are talking about 10 rupee, 12 rupee stocks. But still, over the year, gain is 152%. Karnataka Bank, 150%. Karur Vaishya, 146%. I can go on, South Indian Bank, 121%. You don't mind missing that bus, Harsha?
Yes, I mean, we do have overweight position on the PSU banks as well. We may not have all the PSU banks in the portfolio, and that's impossible to have as well. But yes, we have gained out of the overweight position that we have on the banking sector, and we continue to remain overweight. But selectively, we may look at few stocks, but I don't think we will completely go down the curve and forget about larger banks.
Okay. What about consumption, Harsha? Today there was a startling report saying that urban consumption, especially for discretionaries, which we thought was very strong, is actually slowing. Any thoughts on consumer stocks?
Yes, this bit of a negative that's coming out. While everyone knew that rural growth is quite subdued for quite some time now, urban growth at least was quite strong. But over the last few months, we have seen some worsening of demand trends, even in the urban consumption. We need to wait and see whether that continues or it's just a blip. But overall, we believe that over the next year, the rural growth should start to look better. Usually in a pre-election year, there is going to be quite a bit of spend that goes into the rural areas. And also, after the COVID disruption, I think the rural population is kind of normalizing. And once they have a reasonable amount of savings and confidence about the economy continuing to run at a reasonable speed, then I think you will continue to see consumption trends picking up even from the rural area. So while the recent slowdown in the urban consumption may be some bit of a dampener, but over the year 2023, we believe that consumption, especially the rural growth-led consumption, should start to improve.
Oh, that'll be good news, Harsha, if that happens, because the rural pocket has been struggling a little bit. But gas prices have been coming down, and I think you all have a view on the city gas distribution companies. I understand, as per what reports suggest, is Gujarat Gas has gone ahead and cut prices. I think that's more or less on expected lines because gas prices itself have come down. You all are in the bullish camp, right? What's your view from here on?
Yes, that's right. I mean, we believe that these are some of the natural monopolies that you have in our country. And clearly, the return ratios are very strong. And as long as price is reasonable, there is enough demand on the there is enough demand. So to that extent, I think these companies will benefit as gas prices start to cool off in the global market, and they should benefit from improved demand or sustained demand. And overall, I mean, this is a space that we continue to like. We may not have the kind of overweight positions that we used to have earlier in the past, but certainly there are stocks in our portfolio which are into city gas distribution.
Okay. I have actually two questions for you on two sectors. So let me start one by one. Or I mean, you're free to choose which one you want to talk about. On the insurance space, you know, you've had life insurance companies, HDFC Life, SBI Life come back into action. Any thoughts on that piece and whether, in fact, GIC, I think, is at a fresh 52-week high as well. You like the space?
We do have some exposure in the life insurance space, continue to bet on the under-penetrated Indian market. And usually this quarter is a seasonally strong quarter for life insurance companies, and we should see that growth picking up as well. But overall, within the financial space, we like lending businesses more. As we discussed, credit growth is really picking up and will continue to remain quite strong even for next year. So in that context, we believe that the leveraged lending businesses will do much better than capital market oriented or non-lending businesses. So that's where within financials, our preference is for lending businesses, but we do have some exposure to insurance.
Okay, some exposure to insurance. And finally, on the new age tech companies, there's a big raging debate about whether one should buy into the dip or not. Which camp do you belong to?
We have not increased our exposure to some of these companies. We were lucky not to participate in many of them, and also in some cases we were able to book some profits and get out at higher levels. We are watching the space, but we have not really increased our exposure to new age businesses.
Okay. Finally, Harsha, what's the Kotak internal view on the market itself? Last year we ended with 4% gains in rupee terms, which was a big outperformance compared to US markets. This year, almost everyone is forecasting a US market decline to continue. Will we do a modest 4% again? Will we do much better? Your call.
It's very difficult to predict short-term market movements, especially given that there are so many global challenges ahead. But clearly, I think India will continue to outperform many other global markets in our view. And the performance of Indian markets would be dependent on the earnings delivery. As of now, we believe that the commodity cost pressures that we have seen over the last several quarters is going to moderate. We may not see the entire impact in the December quarter results, but as we go into March and June, we will start to see that benefit coming in. And if demand continues to remain strong, then I think Indian companies should deliver reasonable earnings growth. So maybe we will see better back-ended performance in Indian markets. There is not much room for our markets to outperform, given where our valuations are relative to the global market. But definitely, there is no scare as well. I mean, we may be near the new highs at this point of time, but people are not leveraged. There is no euphoria. There is no speculation that's happening at the broader end of the market, etc. So overall, I don't think this is a market which is going to come off in a hurry. It may be consolidating at around current levels, and depending on how fundamentals pan out, maybe we'll see the performance towards the end of the year.
Okay. Thank you very much, Harsha. It was a pleasure speaking with you. Have a fabulous 2023.
Thank you. Thank you, Lata.
Okay. Well, the markets are practically on predicted lines, with the big indexes moving in a range and the Nifty Bank clearly outperforming. Mid-caps today are underperforming. That perhaps is just a bit of profit-taking. We'll take a break, and thereafter, real estate sector, that's the other one that's been doing very well. We will speak with Irfan Razak, Chairman Managing Director of Prestige Group. MOSL, that is Motilal, is positive on the company for this year, 2023. Thereafter, we will be speaking with Shailesh Rajbhan and Amit Tripathi of Nippon India Mutual Fund. We're going to talk about key themes for equities in 2023.